Hello, this is Les Goldstein and welcome to your April Educational Economic Update. Nice to speak with you folks again. Let's take a look at what's happening here domestically and elsewhere in the world. The U.S. economy grew in the first quarter at a rate of 2.3% annualized, below the 3% annualized target rate sought by the current administration. The stock market has been on a challenging roller coaster ride as investors have been going up and down with the market. President Trump imposed tariffs on allies and rivals alike, stoking fears of a trade war. And the revamped tax code shifted business incentives and started to put more money into workers' pockets. Real economic growth, as measured by gross domestic product, has recently decelerated based on quarterly figures adjusted for inflation and seasonal fluctuation. Still, the quarter-ended gross domestic product growth is still at a rate above the average yearly growth rate since the recession ended nearly 9 years ago. Most forecasters, however, expect quarterly growth to float around the 3% annualized mark for the rest of 2018. Economists on Wall Street have repeatedly warned that the economy's upward streak is unlikely to extend beyond the next year or two. The nation's debt has now topped $21 trillion and growing, a rate and level many view as unsustainable. The cost of paying off that debt grows larger as interest rates rise. Consumer confidence remains high, but confidence did slip a bit in April, reflecting a decline in America's views of current economic conditions. According to a University of Michigan study, its index of consumer sentiment dropped 2.6% from a month earlier to a reading of 98.8% in April. Still, that figure was nearly 2 points above the level posted 1 year ago. The United Nations is seeing global economic growth, but risks are building. Over the last several months, short-term prospects for the world economy have continued to strengthen. This stems from a further uptick in the growth outlook for developed countries in 2018 on the strength of accelerating wage growth, broadly favorable investment conditions, and the short-term impact of a stimulus package in the U.S. Many commodity exporting countries will also benefit from the higher level of energy and metal commodity prices. However, in parallel, the UN sees rising economic risks, including a rise in the probability of trade conflicts between major economies. A move towards a more fragmented international trade landscape could reverse recent improvement in the global economy. The UN continues to see that developed economies are enjoying accelerating wage growth. In developed economies, wage trends present a mixed picture in Europe. For example, in Germany and France, real wages are estimated to have increased at a moderate pace over the last few years, supported by solid or strengthening economic activity and moderate inflation. In other countries, however, real wages reflect more problematic conditions. Italy and the United Kingdom have registered negative or only slightly positive real wage growth, held back by weaker economic growth and hiring conditions, weak nominal wage trends, or higher inflation rates. By contrast, various countries such as Poland and the Baltic states have seen more vigorous annual increases in real wages, reaching as high as 6% annualized, driven by a combination of tighter labor market conditions linked to outward migration and a catch-up effect with the rest of the European Union. However, it should be noted that real wage growth in new EU members has persistently lagged the gains in productivity. What is noticeable across the board is an accelerating trend in wage growth in line with the marked fall in unemployment rates in the region. Wage growth is also accelerating in the U.S., where average hourly earnings in the private sector are rising at their fastest rate in several years. The unexpected strength of wage growth is widely attributed to triggering the disruption of global stock markets in early February. In Japan, for example, the government recently introduced tax incentives to encourage companies to raise wages by at least 3% in 2018 in efforts to spur consumer spending and raise inflation towards the central bank target of 2%. However, many employers have been reluctant to meet this target. So, what's happening here in the world at PFS Wealth Management? Well, today and tomorrow are your last chances to buy your tickets to join us at our June 2nd charitable fundraising event. This will take place in Northbrook, Illinois. Again, June 2nd in the evening. It'll be a casino night fundraiser for a great cause and a wonderful event. One of our guest speakers and celebrities will be Otis Wilson from the 1985 champion Chicago Bears. And Art Norman, the retired investigative reporter from Channel 5, will be our MC. To buy tickets, go to www.agbfd.org and scroll down a bit to buy your tickets. Love to see you on June 2 out there in Northbrook. Now, for the required disclaimer that I always read after these reports. While the information contained herein is believed to be reliable and accurate, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or the solicitation for the purchase or sale of any security. Please consult with us, your team at PFS Wealth Management, before making any investment decision. Les Goldstein signing off for April 2018. Have a great summer.